Hello, good afternoon. You're watching the Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faradian. For now, the market is holding on okay. Yes, there has been a bit of a volatile move that we have seen come by, and in the last few minutes, there has been a further slip. We are in the red right now, but just around the 25,000 mark. In fact, the range of the market has broadly become this 24,900 on the downside to 25,100, and that's the 100-200 point range that we have been within. What's on the back foot today is clearly Nifty Bank. So that index is down. Yesterday, of course, it was outperforming. So today, it's giving up more gains versus the frontline index. You do have a TCS, which is putting pressure on the index right now. No surprise there, given the weak performance that it delivered. M&M, Maruti are some of your other top losers. From the banking horizon, it's ICICI Bank, which is taking it on the chin right now. Axis Bank is not far behind. Hindustan Bank is coming under pressure as well. From the broader markets, however, it's Bandhan Bank doing very well for itself, 11% gain. That audit completion happening, the clarity on the leadership, all of that is auguring well for the stock. Nippon AMC, a bit of a late riser because earlier in the week we had seen that initiation come by on AMC. On that day there were a couple of these AMC stocks active. Nippon wasn't doing much at that point of time. Today it's actually catching up. JM Financial, Nuvama Wealth, some of these other stock market ancillaries too, fairly active in the trading session right now, Aisha.
Oh yeah, absolutely. Just taking stock of some of the other buzzers in trade. Bandhan Bank, like Anisha flagged off, is now up a good 10.5%. There's Nalco, there's Persistent, which is higher by 4%. Exide is looking good by about 3.6%. Lots under pressure as well. Cummins, Crompton, M&M, DLF, they're definitely sliding a fair amount as we speak right now. But let's quickly take it across to our experts and find out how they're wading through the market volatility and the weakness that is now trickling in. We've got Deepak Shenoy with us, Kunal Bothra, as well as Naresh Mirani too. Naresh, hi, afternoon. Let me just quickly come to you. What is it that you're making? Because again, one is seeing a bit of a cool off, especially led by banks. There's HDFC Bank, ICICI, Axis, all of them slipping. TCS, of course, was the weak link from the word go.
So we continue to see flip-flop moves. Say yesterday it was Pharma taking a dip and banks doing well. Today it is Pharma not taking a dip and banks taking a hit. We continue to be range bound, not breaking 24,700 to 800 band clearly tells you we are forming a base around this area. 25,400 is the short-term resistance. So we could stay in this range going forward. The good part is the broader market is not taking a downtick. The breadth is much better in the small cap and the mid cap space. So continue to see more stock specific action, and that should be the trend going forward, at least for a week or two.
Action, and that's what we are witnessing. But the headlines are not only coming from the equity world, a lot happening in commodity and money market as well. For commodities, there was that bounce back that happened in the crude prices overnight, so that continues to be fairly volatile, something that we are tracking very closely. 78.5 is where Brent is right now, and rupee of course breached that mark of 84, further weakening coming in there. So that of course is the other headline to track. But Deepak, what are the things you are tracking in the market? Earnings season has kick-started, and if TCS is anything to go by, doesn't look like you should wait by and watch out for any more surprises at the moment.
Yeah, I think Anisha, the early part of results is coming in. So I don't know how the whole result pack will pan out, but I know that there will be some surprises in certain areas, specifically in companies which depended on a lot of the government decision-making machinery, which was paused in the June quarter and has possibly come back in the September quarter. So you're going to see some of those companies start to do better. There has been a slightly better monsoon, so I expect a few companies like two-wheelers and all that to start at least showing some signs of better results. And in general, I would say the export market, especially IT exports, I don't think they're going to do that well because of the incoming US elections later this year, and I think all major decisions will probably happen after that date because there's a lot of talk of how government will change based on which person becomes president. So I think we'll just have to wait for that part of the market to evolve after the elections.
We'll wait for that part of the market to evolve. But Kunal, what's your sense on the market? While there's no selling pressure as such, there doesn't seem to be an interest in buying either. Would you say till the time of at least, let's say, Diwali or next big trigger, we are going to be fairly range bound and we're not, inching towards the 25,500 in a hurry?
No, I don't expect the range bound nature of the markets to be prolonged. I probably believe that it's just a matter of, I think, maybe another few days, another week or so before the markets get back into a zone where if the global markets continue to show signs of strength, like what we've seen for many of the global indices, the US market specifically, then I think it's bound to be that our markets would probably want to get back onto its feet very, very quickly. So I would probably believe that the nature of consolidation or the time band of the consolidation could be very short lived. My expectation is that if the large cap stocks which have been seeing some intense selling pressure, if the selling abates into these large cap names say in another couple of days, then I believe that the comeback could be much more stronger sooner for the indices. So I believe that this could be a good opportunity to try and initiate few longs, and especially if there is minor more minor dips on the indices going forward.
Right. Deepak, what is it that you've done in the last month or so? Curious to understand whether you've eased off anywhere or maybe even added on the weakness.
Aisha, to be fair, I think we haven't. We've kind of decided to wait till results come in before we take new positions. But we have increased stake in a certain set of positions we already had. For instance, LIC, after it dipped below 1,000, has been an addition for us. We've added a few more in the large caps, including L&T and Reliance. We have some of the smaller caps where it was difficult to take new positions because they were just going up significantly. But wherever there were opportunities that came in when the markets corrected a little bit, some of those positions have kind of been something to add on for us. We are more interested now in whether the results throw us more opportunities because some of the elements we thought were happening or were going to happen in the past have started to happen, whether it is electric vehicles, some layer of consolidation there. There is more efforts that are happening on the battery manufacturing spaces. There is some more movement on PLI and perhaps actual focus on the results. The September quarter gives us a balance sheet, whereas the June quarter gives us only a P&L. So the balance sheet can be actually used to figure out how cash flow is moved as well alongside. So I think it'll be an interesting quarter based on results. So still waiting, I haven't picked up any new stocks recently.
What's the view on Cummins if you're tracking that one closely, or industrials as a whole, Deepak?
We haven't tracked Cummins recently. We've got, of course, I'm big on industrials. I think the whole industrial manufacturing sector is going to change quite dramatically in the next few years. Two reasons for that. One, the world is becoming a silo in the sense that every country wants to set up more and more manufacturing arms for its own consumption, more rather than depend on imports from, say, China and stuff like that. Every large countries, and in that process, some of the elements for India work out to our favor because we have a very large consuming market. The second one is the government focus on or impetus for PLI and other areas of manufacturing, which make it more difficult for someone to import versus manufacture. It's just marginal, but the difference is palpable over time. So you will find that a lot more of the manufacturing, and therefore the companies that do B2B in the manufacturing space will see a significant uptick in the next 5 years. Now, whether Cummins is going to be a significant part of that going forward, because part of the, say, auxiliary power generation comes in from Cummins for the domestic consumption itself. I think that is a thing to be wait and see. But I haven't seen their numbers recently, so I don't have a handle on the company itself.
Deepak, PSUs as a cluster, and specifically the entire defense, railways, shipyard theme, has seen a fair amount of correction, along with the rest of the market, about almost 20 to even 40 odd % in some of the cases. Having said that, I was just taking a look at a Mazgaon dock, for instance, today. They've bagged a sizable order from the Maharashtra State Power Generation Company. Would you be looking at this particular space in terms of the kind of earnings that they come out with? It's been fairly ignored for the last 6 odd months. Maybe deploy some on declines?
Absolutely. In fact, Aisha, we own Mazgaon Dock, so very biased on that front. We've owned it for a while. We paired positions above 5,000 because it was getting a little too big for our portfolio as a size. But overall, I still continue to maintain that there will be a significantly higher growth in this sector and for the company itself. simply because the scale of operations today versus the scale of operations even as a percentage of market share in the next 5 or 6 years is going to be so much higher that I know we're paying a lot of premium for a PSU company operating in this space, but it's not meaningfully higher. And I would rather, honestly buy this than say the FMCG giants of like Colgate or Nestle, where you're paying 60 times earnings for a 10% or 15% growth. Here you're paying about 37 to 40 times earnings, but the growth can be significantly higher. I understand there's a PSU tax, so you will give a little bit of discount to it, but I think the orders in this space move primarily to the PSU players because that's where the defense establishment is more comfortable, the government establishment is more comfortable before they, go down into private players in this space, and there are not many private players in this space. So there is that as a potential. I think you should expect 40%, 50% corrections in this space regardless. This is not a market for beginners, honestly. So it's going to be like it's going to take you have to keep your position sizes to a point where you can handle this kind of volatility if you're targeting such stocks, because things can move really fast and against you, and you have to have a plan of action to act. So I say 40% is normal, but yeah, maybe 60, 75% is bad. That would be my bigger concern. But this stock seems to have been okay, just 40% down and then back up a little and so on.
Okay, so willing to pay and get along the PSU tag because there is growth in the defense story and maybe better plays than other than the other FMCG giants. That is time for a short break, but don't go anywhere. On the other side, we'll keep tracking market because there is a bit of a perk up if that's something to write home about. It's Bandhan Bank, Triveni Turbine, DB Realty, JM Financial, BSE. These are your big movers. We'll track all of those when we come back.
Little bit weak there, 58 odd points lower for the Nifty. For the futures, of course, we're still clinging on to that 25,000 mark. Hindalco, HCL Technologies, TechM, ONGC are some of the names which are holding out, as is Infosys. That's not quite the case with TCS. It's still languishing over 1.5% lower as we speak right now. M&M as well. 31.45 is where the stock is, a downtick of about 2%. But private banks, that's the bleak pocket in today's trading session. That's the one weighing heavy. Reliance as well, absolutely flat as we speak right now. Deepak, how patient can one really be with the private banking pack? Because, each time they make an attempt to claw back and then, just something or the other happens or market falls, as has happened this time. Okay, Deepak has tuned off. We will get back to him in just a second, hopefully. But Kunal, what's your reading on the Nifty Bank and especially the private banking lot?
It's a struggle for this end of the market because at a point when the markets were going all guns blazing, just about a few weeks back, the private sector banking stocks, they had a fantastic uptrend going on for many of these names. But then many of these large cap private sector banking stocks, they failed to capitalize on that strong price uptrend. You saw HDFC Bank falling shy of the all-time high, lifetime high levels, closer to 1790 plus mark. Kotak Bank did its fair share, recovering almost 150 odd points from its previous lows of 1800 approximately. But then that stock has also managed to succumb under the selling pressure which came by. And the likes of Hindustan Bank, Axis Bank, these stocks have been underperformers. So I would probably believe that we are into a phase where the major part of the rally was led by ICICI Bank. That still is one of the strongest name from the private sector banking names even so far. And I believe that a buy and dips approach for ICICI Bank could be a beneficial strategy. Difficult to try and pinpoint when could be the exact time frame when the likes of HDFC Bank, etc., would come out of their major time-wise, price-wise consolidations. But whenever that happens, I think that could be a point where one should look to buy.
Okay, one should look to buy some of these stocks on dips, perhaps wait for those levels. But Reliance Industries, that one is expected to come out with its earnings come Monday. It's a little too early for Reliance to report its numbers in the earnings season. In fact, if we can, let's take it across to Somit to get a sense as to what we should expect from the numbers. The stock is fairly quiet from that 3200 level of that close to the all-time high levels of 3200. It has cooled off to sub 2800 right now. But what's the expectation from the earnings? Somit, tell us more.
Well, Reliance Industries will be reporting its second quarter FY25 numbers, and if you look at the numbers, it is expected to be a muted set of numbers on a consolidated basis. If you see the revenues on a sequential basis, is expected to be flat. EBITDA is expected to be high by around 2%. Margins are expected to come in at 16.9%, while the net profit number that is expected to be higher by around 4% on a sequential basis. Now, it's a muted set of numbers because the strong telecom numbers will be largely offset by the weakness that we'll be seeing in the O2C and the oil and gas division. Now, if you look at the O2C segment's EBITDA, that is expected to be lower by around 5% on a sequential basis, and is expected to come in at close to 12,500 crore rupees. Now, this is because of the weakness that we are seeing in the refining business. Now, refining business is weak because margins, that is the Singapore gross refining margins, that were pretty much flat on a sequential basis. No growth on that front. While the oil and gas exploration business, on that front, if you look at the EBITDA, that is expected to be 1% lower at around 5,150 odd crore rupees. Now, this number is expected to be weak because the production numbers are expected to come in slightly below, and apart from that, the profit sharing of the government has also increased, and because of both these factors, the oil and gas exploration EBITDA is expected to be sequentially lower. Now, when it comes to the retail division, there the revenue is expected to be higher by around 10% on a sequential basis, while the EBITDA is expected to increase by only 4%. So some margin contraction is also could also be seen when it comes to the retail division of Reliance Industries. However, the retail growth will be largely on the back of store addition in new brands, and the rising footfall that Reliance retail has been seeing. Well, Reliance Jio, on the other hand, if you look at it, which is the telecom arm of Reliance Industries, that is expected to report a strong set of numbers, largely on the back of the tariff hike that they had taken. Revenues are expected to be higher by nearly 7%. EBITDA will see a growth of nearly 8%. Margins are expected to come in at close to 53.2%, while the net profit number is expected to be 14% higher on a sequential basis. Now, ARPU, which is the key number for a telecom company, that is expected to increase by around 6%. However, the subscriber base, that is expected to contract on a sequential basis to around 48.8 crore from 49 crore that we had seen in the previous quarter. And the growth is purely supported on the back of the tariff hikes. ARPU growth is expected to be the highest in the last 10 quarters. However, on the other hand, the subscriber decline is the most that we'll see in the last 10 quarters. Now, the decline in subscriber base is primarily on account of the subscriber churn that we'll see post the tariff hike, which has been a normal trend in the previous times also that we had seen. Now, ARPU growth, this ARPU growth that we are seeing in the second quarter will not fully reflect the tariff hike benefits, because that benefits will be staggered over the next 3 quarters, because most of the Reliance Jio subscribers, if you look at, are on longer validity. So these benefits of tariff hike will also be seen in the next couple of quarters also. Now, the key things to watch out for from the earnings would be management commentary when it comes to what is the outlook on the refining business and the petrochemical business. How are they looking at the new energy business? What is the roadmap going forward? What is the timeline for plans to start operations? Apart from that, what has been the customer behavior post tariff hike is also something that we need to watch out for. How has been the growth in the geofiber business, and what is the commentary when it comes to the capital expenditure outlay of the company going forward would be important to track from Reliance Industries earning.
Okay, that's that on Reliance ahead of its numbers on Monday, which is going to be post-market hours. The stock right now, of course, is a little bit quietish in trade. What else is weighing heavy? There's, of course, TCS, but DLF as well is lower by about 2%. In fact, let's just bring up the one-month chart for not just DLF, but even for an Oberoi Realty, Prestige, etc., because you have seen a bit of weakness actually come by in the entire realty pack, more concentrated in the last 15 odd days or so. There you go. It's almost a V-shaped recovery that Oberoi Realty has seen after slipping quite a fair bit in the due market weakness, and that's pretty much been the case with Prestige Estates as well. Naresh, do you recommend buying any of the realty plays in this uptick and rebound that they're seeing?
So structurally, most of these names have not broken the recent lows. So if you look at DLF, the stock has gone nowhere for the last 8 months roughly. The stock was at this 850 mark back in March of this year. So the stock is sideways. Out here, it's a risk reward trade wherein you keep a stop loss below 820, which was the recent low, and expect it to again go back to 950 to 1000 odd levels. The stronger names is Oberoi Realty, which has made a strong base around 1750. That could eventually break out into new all-time highs. Same is the case with the Godrej Properties, which has made a strong base around closer to that 2,800 to 3,000 mark and is trying to make a bounce back. So structurally still positive on the whole real estate space, focusing more on the larger names.
Kunal, today there is quite a bit of volume, of course, on Bandhan Bank, but separately the other mid-tier smaller banks, the likes of Yes Bank, IDFC First Bank, they are also seeing quite a bit of heavier volume, PNB as well at that. Would you be a buyer in any of these second-tier names?
So maybe PNB, PSU banking names, few of these PSU banking stocks, they could probably be at a point where the indicators are oversold. So what's actually happening is that we did a relative strength study for the sectors in the fall from those 26 September highs for indices, both the Nifty as well as Bank Nifty. And in that context, the second or the third best performing sector in terms of momentum is actually the PSU banking names. And the likes of SBI, for example, Bank of Baroda, PNB, Union Bank, etc. Many of these stocks have come back to their break, bouncing, more in terms of the price trajectory in the last 7-8 days when the markets have taken a tumble. So I think in that context, maybe these stocks could stand to outperform from here on. But what we need to see is is first level of a confirmation of a breakout. So when a sector gets into a revival, there are first few leaders which are established from those sectors in terms of price performance. Right now, it's small bits of everything which is bouncing off from the PSU banking names. But once we start to see those signs of strong leadership emerging into say one or two names from the large cap PSU banking names, that's where we probably get a lot more confidence. So as of now, yes, PNB, Bank of Baroda, these are two names which I would be bullish on. But maybe one more level of confirmation of a breakout for these stocks, whether it's a swing high or a breakout of the long-term moving averages, I think should add more confidence.
Right, okay, let's get in some closing trades as well on that note. Kunal, let's have your list first.
So I'll go with a buy on Exide Industries. That's a chart which is looking very attractive, forming a rounding bottom formation after almost 3 months or 4 months of consecutive selling for the stock. So I think at closer to 525, 30 looks very attractive for at least a 7 to 8% upside.
Right, and Naresh, what about your closing ideas?
So that would be a buy on L&T, a good risk reward trade here. The stock is back to the same prices as it was on election day. Closed around that 3,400 mark around that time, and also that was the price the stock was 8 to 10 months back. Last 3-4 days it has not broken below 3,400, so could play a bounce back from here towards 3,650 to 3,800 in the short term.
Point taken. So L&T is one of the stocks to watch out for. We are headed into a very short break, but as we do that, perhaps the Mumbai infrastructure is finally looks like there is light at the end of the tunnel, and the Navi Mumbai airport perhaps is going to get started very soon over the course of next 12 to 24 months. At least the inaugural IF landing has happened. They are expecting that full operations will commence from March 2025. My colleague Asta was there at Ground Zero. Let's hear out what she had to say and what her experience was like at Navi Mumbai airport.
We are standing at the southern runway of Navi Mumbai International Airport, and it's the part of the phase 1 of this international airport. And behind me, you can see the Indian aircraft of IAF C295, which has just made its first landing at Navi Mumbai Airport. Now, talking about this inaugural session, it was in the presence of the Chief Minister of Maharashtra, Eknath Shinde, the Deputy Chief Minister Fadnavis, and other aviation ministers were also here to witness the first inaugural landing of this aircraft. Talking about this airport, this Navi Mumbai International Airport will be opened next year for the commercial flights by March. Also, this Navi Mumbai Airport, which is the second airport in the Mumbai metropolitan region, which is one of the most important infrastructural development for Mumbai. This airport will feature 4 terminals and 2 parallel runways. Also, this airport has a parking space for over 350 flights. This airport will cater to 90 million passengers annually. Now, these are the main highlights of this airport as well. Also, during the inaugural session, IAS Sukhoi fighter aircraft made its fly-past appearance during inauguration as well. And the main key feature of this airport will be that there will be railway connectivity between the terminals so that it could ease the connectivity for the passengers to go terminal to terminal. Now, this is the very important factor which will be open for the commercial flights next year by March.
Welcome back. Let's take a look at the market mood right now. The 3 p.m. move. Is there anything? It's Friday, so perhaps people don't want to take many positions over because it's been fairly volatile, especially with what's happening in terms of the geopolitical tension across the world. So you have the Nifty and the Sensex in the red, but the broader market is actually holding out okay. Nifty Bank is also down, but today the strength is there in the broader markets. In terms of the individual movers, then of course we have been talking about the strength in Bandhan Bank, but let's try and understand from Gaurav as to what is the reason and what exactly is the positive coming in from that audit, and what do the brokerages have to say about the new leader. Gaurav, take it away.
Well, yes. First, let's understand what has happened in Bandhan Bank. So, Bandhan Bank had raised a request to get around 1300 crore rupees sometime in FY24, on which we saw the audit started from NCGLT because of the that was a special audit that they have handled, and on back of this, Bandhan Bank was under pressure for the last few days. But after that, the audit has concluded. They have said that the bank is eligible to get more than 1200 crore rupees. Apart from that, when we talk about this amount, or at least 900 crore rupees has been already delivered to the bank, and now the 300 crore rupees will come to the bank as other income in the next quarter. Other than that, bank also had around 228 crore rupees as the income that they have earned via recoveries. So overall, we will see a net impact of around 500 crore rupees in their other income in Q3 FY25. Other than that, if we talk about the brokerages, now Macquarie believes that this will give banks PAT a push of around 15% for FY25, and other brokerages are also being bullish on this move. Other than that, what has happened is that RBI has now appointed Mr. Parth Sen Gupta as MD and CEO for the bank. Now, if we talk about Parth Sen Gupta, Mr. Parth Sen Gupta already has a strong background. He was MD and CEO in Indian Bank. He also has served as a Deputy MD and Chief Credit Officer in SBI. So, this is also another trigger which is playing out in a positive way for Bandhan Bank. When we talk about brokerages, now CLSA believes that this is actually the key overhang on the stock is gone, and from here on we will see some kind of re-rating. When we talk about Jefferies, they are also being a little bullish on this. They are happy that on the appointment of the new CEO, and at the same time CGFMU recoveries has also come out. When we talk about Goldman Sachs, they have also said that this move has actually removed the investors' uncertainty about the stock, and as a result, when we talk about the stock performance, it is up almost more than 9.5%. So definitely positive triggers playing out for Bandhan Bank. It will be key to watch how this plays out when the results come out for Bandhan Bank.
Okay, that's Bandhan Bank definitely seeing quite a bit of reprieve as the two overhangs get lifted for Bandhan Bank. But take a look at Kotak Bank as well. The House of UBS just last evening maintained a neutral, though upped its target price to 1950 from the current 1800. They believe that cyclical headwinds for NIMs, CASA, while credit cost is going to be rising. The NIM sensitivity to rate cuts is relatively high among the covered banks, but they do believe that there is stability in the core business, and that's going to be key for the re-rating. Let me welcome on board Nitin Raheja as well. Nitin, hi, afternoon. What is it that you're liking within the private banking pack, and what's the pecking order looking like? Or would you say there's lots happening in the market? I mean, private banks, well, they can be part of your core portfolio. That's not where the momentum will be, perhaps.
Look, I think one needs to factor in that where there is momentum, the valuations are not stacking up for a lot of those. And that sort of in a market which, if you really look the way it's sort of behaved of late, it seems to be moving into some sort of a consolidation zone or a time consolidation zone. I think, so to avoid trying to sort of overpay, I think focusing on valuations becomes important. And in that sense, the earlier point that you made on private banks, I think private banks look well and attractively poised. I think a lot of the bad news that from a regulatory perspective is already in the prices, and I think they're trading at valuations which, so I think if one really needs to look at making money, and in markets here, we need to take a little longer term view, and from that perspective, I think the banking space looks very attractive.
Do you think, Nitin, we have made the top for the year?
I'm sorry, can you repeat your question?
Yeah, I'm asking, do you think we have made the top at least for this year?
You mean for the financials or banking?
On the Nifty and the markets overall, do you think we have topped out and we should moderate the expectation for next year, because we have already done what, 19% or at least 15-16% this year, and that comes on top of that big performance that we had seen last year. So in a matter of couple of years, Nifty has given very solid returns, much ahead of the average.
Look, I wish I had a answer to that question, it's clearly, if you look at the Nifty per se, right? I think we see among all the indices, the Nifty being the most what we feel within a zone where there is no euphoria and there is not too much of fluff built into valuations. I think in that sense, can the Nifty move up from here further? Possibly the answer is yes. And like I highlighted, if you look at the Nifty, 1/3 of the Nifty comprises financials, and financials have nowhere the kind of euphoria in terms of valuation built into their prices. So tomorrow, if this leg of this segment of the market does move up, then you will see the Nifty moving up because it's almost 1/3 of the market. So I wouldn't say that I wouldn't want to call that this is the peak of the Nifty. Again, the other element is the kind of flows that are coming into the market today. It's not only from domestic mutual funds, but also the fact that global FPI money is also waiting in the sidelines for any sort of correction or time correction. So as we sort of go down the year and we start discounting FY 26 numbers, I would think that I wouldn't say that this is the top of the Nifty. I think there is enough legs for the Nifty to keep going, but whether it will happen in the next 2 months or 3 months, that's something which is sort of open to question.
Right. Nitin, from the festive season currently, what is it that in particular you'd be looking out for? Because, while the extreme polarization clearly is evident, Uber luxury continues to do well. It is, rural where there is a question mark, and semi-urban areas as well, where you are seeing some amount of sort of slowdown setting in. Case in point being passenger vehicles, for that matter. What is it that you're particularly, or so far has been your read-through from the festive sales data?
So it's been pretty mixed because just the other day we met a leading textile branded apparel play, and they talked about the fact that how 2nd of October was possibly a very good day for retail sales and festival sales. So I think what we are seeing is a mixed trend. I think autos is going through a cyclical phase where a lot of inventory lies with dealers and in the pipeline. And also don't forget, in autos, one of the leading factors driving demand was the introduction of new models. And this year, companies who have introduced new models are actually seeing a very robust demand, while the companies whose models are a little dated have actually seen a little bit of tepidity as far as sales is concerned. So I think what we are seeing from a festival perspective again is very mixed. It's difficult to draw out any theme. The heartening fact is that we are seeing demand coming at the lower end of the spectrum. So hitherto, for example, all these years we were seeing premiumization of consumption as a big theme. We are seeing some slowdown there, although to me it's really a multi-year, multi-decade theme that is going to play out as our GDP per capita moves from 2,500 to 4,800 over the next 8 years. So that's a multi-decadal theme at play. In the short term, you could see some blips coming there. But the interesting thing is the bottom K or the lower K, which was struggling, has started to see green shoots out there. So I think from that perspective, and also this year is supposed to be, from a wedding season perspective, has a huge number of dates that are coming out in the second half. So I would believe that consumption is going to come back and should do well in the second half.
Okay, consumption expected to do well in the second half of the year. But what's the view, Nitin, on pharma? Fairly volatile moves. At one point of time, there was that bottoming out of the US price erosion, which was a positive. That entire Biosecure Act was a bit of a fillip. The entire GLP-1 opportunity people were talking about. But then yesterday came that Medicare blip, and one didn't know really what's going to happen with the elections just around the corner in the United States. In context of all of this, how should one position themselves in healthcare sector?
So I think in the healthcare sector, I think, look, pharma is a long-term story which is going to play itself out with some events in the short term which are going to play. For example, we've had this massive bump that has also come because of Revlimid for a number of companies. Now, as that effect starts wearing itself down, you will see, I think, companies in the US who are playing the US, companies who have a very strong specialty chemical business build out will continue to do well. Okay. On the other side, the commoditized part of generics is going to struggle. So I'm also a little more bullish on domestic pharma. I think that is a market which has quasi FMCG sort of qualities and attributes. So I think that is underlying a story which is going to continue to remain strong.
Okay, we're going to take a very quick break, come right back. We'll address some of the other buzzing counters and, of course, wind up for the week as well.
Welcome back. Well, in terms of individual names, Sudarshan Chemical deserves mention because that stock shot up. Remember, it was widely reported that the company is looking at a large acquisition of ubac Group, and that's finally happened. It's coming in at a cost for 127.5 million euros, approximately 1180 crores. So that stock has shot up 17% right now. Post-acquisition, the combined entity will have a comprehensive pigment portfolio of high-quality products, having a strong presence in Europe as well as America as well. It's expected to close within the next 3-4 months itself, something which has been talked about because ubac is a large player at that, and Sudarshan Chemicals taking that up will be a very interesting mix coming in. So we'll watch out for how this acquisition pans out. But Tata Group, that continues to be in focus on account of that expectation as to who will be the next person who will chair the Tata Trust, organization. It does look like Noel Tata is the unanimous choice which is coming through. In fact, we did speak with a whole host of experts to talk to us about what exactly will it mean for the Tata Group going forward, what's the expectation with respect to the way forward, and whether the philanthropic activities will continue at a similar pace or not. Hear out what they had to tell us.
Confirmation has come through. He is appointed as chairman of the Tata Trust. My congratulations to him. I'm so proud, so happy, very, very pleased to see the Tata Group in great hands, both the trusts as well as Tata Sons. I have personal experience of the fantastic way in which he conducts himself. He's such a wonderful human being, very, very open, very much a consensus builder, a person who actually makes sure that everybody's voice gets heard. He's just an exceptional human being.
Until the other day, the same person was chairman of both. So nobody understood which hat he's wearing and what he's doing. Now they have been separated. And I think it's a very good thing that the Tata Trust on spending the money, Tata Sons can focus on earning the money. Just like the balance sheet should be with debit side and the credit side. The person who's earning the money can focus on earning, and the person who's charged to spend the money sensibly can focus on that. So I think it's all in the right direction. I can't say absolutely anything more, and luckily I'm not in service, but if I was in service, I would have endorsed this decision totally.
I think all companies in Tata Group are doing well. And I'm sure as a trustee of both the trusts, which own almost about 60% in Tata Sons, his job is to really see what best we can do in Tata Sons in terms of both profitability, of course, which is the economic interest, but more importantly, the Tata Sons should also become a huge legacy for the entire Tata clan. So I think to that extent, I feel that Mr. Noel Tata is a very good choice. Because Mr. Ratan Tata, like he was there for almost about 4 or 5 decades, I'm sure at 67, Noel also has a long runway to see that the legacy of the Tata Group continues in the manner in which it has been in past.
Okay, let's move on and let's just see where the market is settling in at for the week. And we're pretty quiet around that 25,049 odd level for the Nifty futures for sure. Just want to see how this week we've done. And once again, it's been a decline for a second consecutive week. Titan, Britannia, these are names which have actually led the losses. Midcap index, though, has managed to close in the green this week. CG Power, Dixon Technologies, these have been some of the leading charts there. And the Nifty Smallcap as well has managed to finally snap its 3-session losing streak. Triveni Turbines, MCX, these are some of the big winners for the week gone by. Autos, Pharma, Realty, IT, they've all actually managed to do quite okay so far this week, irrespective of the weakness in TCS. But Nitin, just in continuation to the point that you were making about a branded apparel retailer, what about FMCG? Because, you know, that's where there seems to be a lot of dichotomy at play. Looking at Dabur's numbers on one hand and, you know, Marico and the rest the other.
Yeah, that's true. And, but I think the overall expectation is that if you look at FMCG, the worst is possibly behind them. And right now, the base seems to have set, right? We've had a good monsoon. We've seen an increase in MSP. We've also seen the fact that, the labor situation is far more better. So I think we should see an FMCG revival coming about on the rural area, because that's the area that's been struggling. So, but I think some companies have talked about green shoots. Some companies have not done that yet. So I think it's yet early days, and one has to really wait and watch. Hopefully, the festival season sort of creates some element of buoyancy. But I think right now it's pretty early days in that whole pack, and the valuations where they trade clearly don't really present a great opportunity.
That's the take coming in on some of these FMCG companies. But come Monday, it is not only going to be about Reliance, but HCL Tech also reports its numbers. Now, after TCS, the expectations are a bit muted, but we are working with a constant currency growth expectation of 0.8%. Dollar revenue is expected around $3,420 million, which will translate to around 28,550 in terms of rupee. Margins are expected to expand by 90 basis points because this quarter there will be no wage impact. The seasonal uptick will happen. That is the usual case with Q2, and the efficiency levers will kick in, and all of that will mean that the margins will expand in this quarter. And overall, the expectation is that growth might be impacted because of the stake sale that they did, but that would be offset by some of the other businesses of the company. It will be interesting to hear out from the new CFO which has been appointed, what's been the new deal TCV, what's been the growth rate in US, BFSI manufacturing, Gen AI. All of that will come into picture, and of course the guidance, that's something the street always watches out for. Do they maintain the 3 to 5% growth with 18 to 19% margin guidance, or there is some change there? That's something that we'll watch out from HCL Tech come Monday morning. But time now to take the BDSC trades, and does HCL Tech or any IT name feature in that list, Naresh?
So I would wait out for the results on that case. But the two names which I like, first is the buy on L&T, a risk reward trade here, closer to the last 6-8 month lows, stop loss at 34.70, target price of 35.70. Second is a buy on Nippon Life, which is on verge of making a flat breakout, would revise the stop loss to 690, target price of 720.
What about your BTSC trades?
So I'll go with the buy on sale from the metals pack, expecting the stock to get back into a turnaround as well as a potential breakout. So buy with a target of 140, stop loss could be kept at 128. And the second would be a buy on Motherson, Samvardhana Motherson. That's a chart which is making a comeback closer to a previous swing high resistance of 215 approximately. So would look out for targets in the range of 224, stop loss at 207.
Okay, that's the take coming in on some of the BTST ideas. But Nitin, good to have you on the show. Kunal, Naresh, we'll let you guys as well go in on that note. Closing in the week, holding on to that 25,000 mark. Let's just bring up the Nifty intraday graph as well. A little sub that mark at 24,967 is where we're shutting shop for the week. But let me hand it over to Snehi for the closing trades.
Well, absolutely, Aisha. 24,967, 970 thereabouts is where we seem to be closing today's trading session. However, we have 2.5 minutes. Let's see if we can surpass the 25,000, but doesn't look likely for that to happen. 0.1% lower coming in on Nifty. Sensex also 0.2% lower, below that 81,500 mark coming in. However, our performance was seen from the broader markets today because Nifty Midcap and Small Cap each inched up about 0.5% each, and strong support in fact coming in, outperforming the benchmarks at least is the broader markets. However, if you take a look at the advance decline ratio, it is very evenly distributed between the advances and the decline. So very even market, but well, lackluster to sum it up, and not much happening on the Nifty in today's trade. If you take a look at some Nifty gainers today, Trent, Hindalco, Tech Mahindra, HCL Tech, ONGC, HUL, all of these stocks were in the green. However, what weighed on Nifty today was TCS after a poor set of results coming in yesterday, not meeting the street's expectations, and brokerage is also not sounding very bullish on that stock. M&M, ICICI Bank, CIPLA, Maruti Suzuki Power Grid, all of these are your top Nifty losers of the day as well. But let's take a look at some sectoral gainers and losers today. Nifty Pharma on top of all the sectors today, big sectoral winner today, 1.2% higher is where Nifty Pharma is at, followed by Nifty Metal, IT. Both of these have also closed in the green for the day. You have energy and FMCG also that seem to be barely holding on to the green. However, what did not do well today was Nifty Bank, because almost 0.7% lower is where Nifty Bank was, and that was weighed by ICICI Bank, AU, Bank of Baroda, IDFC First, Axis, IndusInd, HDFC. All of these banks did not do very well. So you have the large and the small banks that did not perform very well in today's trading session. However, let's once again shift focus to Pharma, because that's been the top sectoral gainer. Granules, Ipca Lab, Mankind, Divi's, Lupin, Aurobindo, Laurus Labs, all of these have been your big Pharma gainers in today's trading session as well. So lots to talk about when it comes to other newsmakers and buzzers as well. You had Sudarshan Chemicals in the last few minutes of trade. That stock has inched up about 18% because its wholly owned subsidiary shall acquire the pigment business operations of ubac Group of Germany. So that's positive. Bandhan Bank on the back of the new MD and CEO approval by RBI, and also the payout from the National Credit Guarantee Trustee company as well. So two positive news flows. Bandhan Bank also up 11.5%. Solid moves coming in on both of these stocks. Ashoka Buildcon also lowest bidder for a 918 crore project, so good move on that one. Exide has invested almost 100 crores in its battery subsidiary, so very good move coming in on that stock as well. Oberoi Realty was also up 2% on the back of the fundraising. However, what did not do well was Cummins India on the back of a brokerage note coming in from Goldman Sachs with a sell recommendation. So well, this is how we are shutting shop for the day. Let's just pull up the Nifty chart once more. 24,974 thereabout is the level that's reflecting on the screen. 1/10 of a lower, lackluster trade coming in this Friday for Wall Street. For the Lal Street.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.